Okay, welcome to the weekly meeting, 1223. I just want to cover basic market structure because um, it is important to understand as traders. Now, Kim does this basic course, and I don't want to step on any toes.
10.99. If you have your
Whoever,
card, please scan it now. 11.
okay, I got you. All right. So, Fo, are you there?
Yeah,
If I squeeze this chart together, right? If I squeeze this chart together, this is showing everything that's going on here. So if I'm clued into what's going on, price pushed down, we broke these lows, it's came back up, right? What I want to pay attention to is my swing highs and my swing lows. So what I really want to do is mark my swing highs and mark my swing lows. If I'm expecting uh, a move based on this 4-hour chart, right? I understand we are expanding away from here. What I don't want to do is if I'm in this for a long, you see how this gave you a bullish order block and it's pushing up? What
yeah,
I don't want to do is buy at the top when we break this high. I want to wait for this pullback. See how it pulled back to
yeah,
level? And now it's showing exhaustion. So if I take a trade here, I want to protect this low, right? And take this trade higher. Because there is no structure on this side, I would have to look over here to see where my
what's the
next
one?
highs are. And then I could choose to get into a trade that goes to these levels over here. And I would protect that low, right? Maybe I'm targeting the level of these equal highs, and it's a 3.47. That's cool. Does that make sense?
Yeah,
So if I have this particular setup, I would want to drop down to the 15-minute chart to actually find, an entry based on that 4-hour structure. So maybe I'm fibbing this break. Now I'm waiting for the pullback. And if your entry criteria is you need a 78.6 pullback, then you can't enter this trade until it pulls back here. If your criteria is I need a 61% pullback, you can enter right here. You just have to protect a little bit lower than the swing low here. Whatever your entry criteria is, right? Maybe you need a 78.6 and then you need a chalk after that. Maybe you need a 61 and you need a chalk after that. Whatever your entry criteria is, then all of this stuff needs to be predetermined, written down, like, and understood by you as a trader. And the way you do that is you go look at videos, right? Or you meet with people here for one-on-ones, and they can show you exactly what you need to see on the chart. Do you know what chalk is?
yes. Change the character.
Yes. So once you get your chalk and it pulls back, you know that's your entry. You're in the trade. You know what to protect. So that means you have a entry, you have a stop loss, you have a take profit. Now you never have to touch that trade again. You don't have to go make adjustments. You don't have to do none of that. It's either going to hit your stop loss or it's going to hit your take profit. And you should be fine with either one. Does that make sense?
Yes.
Okay, this works the same. This is the same thing that we should be doing on that weekly chart. Right. Now, what you don't understand and what you haven't really done is did your risk management. No trader will ever succeed without understanding risk management. So there are videos on risk management. There's a section in the Discord on risk management. You need to watch all the YouTube videos you can on risk management.
Okay.
And then we'll have a conversation about it. Hassan, you understand risk management?
I do to some extent, but my problem is I don't frame my entry from the higher time frame. I just, I see it on the 1 hour and I enter on the 1 hour. I just protect whatever high or low on the 1 hour. So
That's
most
fine.
times,
That's
most times the trade be taking me out before it even goes where it's meant to go. So yeah.
Well, if it takes you out, it's because you're not entering the trade properly. Risk management is all that is you're going to risk whatever percent that you're going to risk. If that's 1% and you have a $1,000 account, then you're risking something like $10, right, on a trade, or what is it, $100 on a trade? That's 10%. So you're risking $10 on the trade. All you got to do is take whatever your account is, multiply it by your 1%. And if
yeah, I do all that. I know how to, do just 1% with every trade I get in, but it's just my timing most times that's been off.
If your timing is off, you need to look at what you're trying to do. If you're trading along, you're waiting for this break of structure and a pullback. If you're a pullback, some people say retest, but I want a pullback of at least, for me, the 62. Some people will only trade at the 78. If you're a person that only takes trades at the 78, you won't get in as many trades, but you won't lose as many trades. Does that make sense?
Yes.
So maybe you need to go back and tweak how you're entering your trades. And if this pullback is at an imbalance, see the imbalance right here?
Yeah.
I mean, that's a pretty darn good sign that this is going to go your direction. If you're patient enough to wait for the trade to get here. So if you saw this setup and you were going to take this AU trade, as a new trader, you can go to your logbook and say, hey, I'm going to take AU when it gets here. So that means when the market opens, you don't FOMO your way into a trade. You're waiting until the trade gets here, right? You might set your alert. It's already logged in your book before you take the trade. That means whenever OG posts his trade that he's taking, you don't FOMO into that trade. This is the trade that you're going to take this week. You're going to live or die by it. Your account is going to grow or it's going to get knocked off by whatever percent, and you're cool with that. If you can do that, if you can stay right there as a trader, you're going to have a great 2024. If you start doing other stuff, you're probably going to blow some accounts. And it just depends on how much extra you're doing to how much money it's going to cost you. It might cost you 60K like it cost me. But if you have some restraint and some discipline and you listen to the clowns who have already ran the race before you, like myself, who've already spent ridiculous amounts of money doing dumb stuff. There's an old saying out there that says, a wise man learns from the mistakes of others. A fool learns from his own. So, you can pick and see, you can pick and choose who you want to be, the wise man or the fool. But I'm telling you, if you stay here. If you stay in that wheelhouse, you're going to last a lot longer and you're going to find success a lot faster. Trading isn't going to make us a millionaire immediately. Over time, if you stack the time and you build that account, then you'll see real amounts of money. And the thing that helps you, the advantage that we have over somebody who started 5 or 10 years ago, is we have prop firms. So we can trade $100,000, $200,000 and make real money relatively quickly. Where somebody 5 or 10 years ago would have to build up their $100 to 1,000, 1,000 to 10,000. Okay. So it's not a race. It's not a speed thing. Be very picky with your trade setups. Write them down before you get into them, and it will keep you from FOMOing into trades. Okay. If you're trading a 1 hour chart, that's cool. However you want to do it, that's fine. But come up with your criteria to enter a trade and do the same thing every time. That way, if you lose 5 or 6 trades, you'll know, hey, I need to make some adjustments or whatever the case may be, right? But you got to think of your trade, if you've done any back testing or if you're just going to forward test it, I would forward test it in the demo. But over a period of time, I would say, 4 or 5 months, either your trades are going to be panning out or they're not. And then you'll know you need to go back and make some adjustments. I would suggest too that there are people who trade that 1 hour chart, like Ish, who has a great deal of success. You could just get with Ish and see if you guys are trading similarly, and maybe you can make some adjustments accordingly. I generally don't trade the 1 hour chart, but we have people in the group that trade a multitude of different ways. So you can always find somebody who trades probably a similar style that you trade. You guys have any questions? Brad.
No, for now.
Okay, so if you guys understand market structure, that's awesome. If you don't, please get with Lil Kim, and structure is structure. You're going to pay attention to the highs. You're going to pay attention to the lows. You're going to pay attention to which one of them gets broken, right? Most of the time, if you're trading, right, we're not just trading on the 4 hour chart and dropping down to the 1 hour. If you're a 4 hour person that's looking for your setup on the 4 hour, you want to pay attention to the first time frame above your time frame, because on this time frame, this daily chart is telling you that we're going bullish. So when you drop to your 4 hour to take your trades, you understand that the daily is bullish. You're not looking for sales, you're looking for buys. All right. But if you guys need help, I would suggest you get with Little Kim's beginners class. Or, y'all schedule a one-on-one and you can get the required help.
I think we get confused with needing to do something and not thinking we need to do something. I don't need to document this part. I only need to document this. Now you need to document the whole thing, but you don't know that you do, right? We're telling you do, but you want to do it on your time. You want to do it when you feel ready and all that. You got to be ready. They say if you stay ready, you ain't got to get ready. It's stuff like that, right? You as much ahead as you can be with your pair, you can be. You can be as far ahead as you really want to be. But until you know that it's a fact, you don't know that that's a fact. So you spend all this time becoming a seasoned trader by eliminating what's not real. Like you can actually find every answer you're looking for. And once you know that, now you're going to go find all kinds of pairs because you found it in one, which is great with what we're doing with gold because it's proving to people that it is telling you the story and you can follow it and you can do that in any pair. So keep looking because you will find it.
And document, man. Like,
Yeah.
I can't stress that enough, man, because you're not going to know, you're not going to see it until you go back and you look at your trades. If you write your trades down before the week starts, you're going to have proof on your MT5 or your trade locker in your history. You're going to see the trades that you actually took versus the ones you wrote down. You know, and then you'll see, well, dang, man, why do I have so many entries? You know, why did I fiddle so much if I put my trade in and I put my take profit and my stop loss? You can see immediately what you're doing wrong. But if you don't write it down, it's going to be a course of time that passes and you're still going to make the same mistakes. Still going to blow your accounts. Still going to overtrade. If you write it down and you have a log book of your trades, right? You know, you can write down how you feel, but at the very minimum, you need to write down what trades you're taking and probably why, right? Why are you taking that trade? What setup? That's your why. Hey, I'm taking this trade based on a bullish order block on this time frame. You know what I'm saying? Whatever. You write down your setup so you understand it. That way, you're going to see what trades you win and what trades you lose. If you've won 10 trades and you've taken all 10 of them because you had a bullish order block on whatever time frame, that might be the only trade setup you need to take for the rest of the year to be a profitable trader. Right? So you're going to see if you're winning your buy trades or your sell trades. You're going to see whether you're winning on London session or New York session. You're going to see all of that. All of it, you'll see it. So if you document these trades, you're going to do yourself a favor. You're going to streamline the time it takes for you to go from a loser to a winner. All right. We're all going to be losers. You can't avoid that piece. You can't avoid losing when you trade. Get comfortable. Love it. I mean, it's going to happen. It's like a baby learning to walk. None of those mofos can run 4.40s. They got to get up off their belly and actually stand up straight before they take a step. Then they got to take steps without falling. Then they got to walk without falling. Then they got to climb stairs and all this other stuff. They will never be a sprinter in the first year of walking. Yeah, you can't be a world-class sprinter until you got 12 years under your belt, you know, until you go through high school. So my point is slow down and embrace the process, because the process is what's going to generate the future you. Whether the future you makes a ton of money, which is totally possible, or the future you is still blowing accounts, which is totally possible. When you skip steps, when you try to blow through the process, you're going to injure yourself. As far as trading, you're going to injure yourself before you even get started. Understand what market structure is. Understand risk management. Those are the two most important things when it comes to trading. Log your trades. If you don't do that, how else are you going to have control? Trading is fun. It's fun. It's the adrenaline, the endorphins. They start when you enter a trade. So you have to write them down so you'll know, oh, I'm only taking this trade this week or these 2 trades this week. Why would you want to lose more than 2% of your account every week? If you lose 2 trades, hey, bro, I mean, you had a good week. You lost. Preserve that capital until next week. The market is going to give you a different look next week. You don't need to lose any more than 2 trades, 2%. Because if you don't have capital, then you can't trade. And every week we get new order blocks. We get new opportunities to go be successful. Okay.
We gotta keep going. We don't want to stop. This the self-discipline. It has to be self-discipline. You know, no one can tell you but you. Now, how do you do that? You write it down. Why don't we want to write it down? Because it's a lot. If we took the random worker that has a paycheck and they can buy 10K account after 10K account, how many 10K accounts are they going to buy? How many trades have they lost? 1,000 in a day. Like, imagine how many trades this person is losing because they have money to keep buying accounts, right? But how many trades do they actually lose if they really just documented it? If they just did it once, from the time they started doing challenge accounts until today, let's say they did 10 of them. And then you go up there, you go document every trade you've taken, and then you put it on a spreadsheet in front of you and you look at it. And everything that Todd just said, the session, whether it's a buy or a sell, whatever your percentages are going to show on that screen. And as soon as you see it, you can be like, oh, look at that. I didn't even know that. You didn't even know because you just put it in front of your own face and you saw it. But you need someone to lead you to do that. You don't need nobody to lead you to do that. You do that. That's what our repetitious, everything that we're trying to teach is all about, that. Making you see what is very easily available for you to grab and attain this information about yourself. And you conquer yourself and you beat yourself and you become great. That's it. That's what we're trying to tell you to do with everything that we teach. That's what we're trying to tell you, that you have to overcome self.
And some of y'all, man, self is a mofo. It's, the worst thing you can do is turn yourself loose on yourself because you got zero control anyway. You eat what you want, you do what you want, you sleep when you want, living a fat, dumb, and happy life. And that's cool. That works for your regular life, but it's not going to work for your trading life because every mistake you make in trading, a real trader is going to take advantage of you, right? Like this is $1 trillion, a $6 trillion a day industry, and it's a cause and effect relationship, right? You either, the money you put in, somebody else is taking out. So you're trading against professionals, and you're just giving money away, man. You're giving money away. When we teach exactly what to look for, right? We know exactly what time that we should look for our setups, thanks to ICT. Risk management, we know exactly how much we should risk per trade. And our control measure is, hey, man, if I lose 2% this week, I'm done. So if you have all of those things that then, you shouldn't blow an account. Everybody in here should have the knowledge, with the exception of Fo. I think Hassan, you have the knowledge, but with the exception of the brand new people, everybody else has the knowledge that it takes to be a successful, profitable trader. The only thing that's missing, the wild card, is the self-control piece. That part is very difficult, especially for the people who have money. Because, OG said a 10K account is only $100, but the 5K account is only 50. So you can blow through 5K accounts like Skittles. Get some control in 2024. You do it now. Go buy you a calendar, a logbook. Go buy a notebook. Grab some notebook paper. Log your trades. You know, I was laughing because OG, like, it's hard because you got to write down all those trades. Some of y'all look like Popeye because that's how many trades you put in. If you log those trades and you are only going to take 2 trades per week, then you're going to have a lot more success than somebody who's taking more than that, right? And I get it. Some people scout and all that good stuff. I'm just telling you what I know. The less trades you take, the better off you're going to be. Even if you lose that trade, you lost 1%, next week, you're going to win, a larger percentage. All right. So I think we have a few more people in here. Is this anybody? I don't even know this. Rajia. I'm sorry if I'm killing your name.
Rogia.
Rojia.
Sorry.
Yes.
Are you new?
Are you new? Yes.
Okay, awesome.
Okay, awesome.
I'm gonna talk off for Rogia because Rogia is new to Discord. The Rogia is not new to trading. So
Okay,
I
cool.
invited her in here. It's my girl.
Okay, cool. So if you anybody who is new to trading, you got to understand market structure. You got to understand risk management. Those are the first 2 things you need. Then you'll need a strategy, and you'll probably need support along the way, right? You have a lot of people here. If somebody rubs you the wrong way, it's not personal. Everybody wants everybody else to be successful. If I ever offend you, I apologize in advance, but just say something. Hey, I'm offended by that. It's never personal. I would like to see everybody win and experience the success of trading, right? It's all of us, I'm sure, have experienced struggle in life, but this is a way that we could, I guess, change the tide here. And going into 2024, there are some things that I understand now that I had to pick up along the way. And hopefully everybody is picking up things along the way that will ease their journey, right? Last year, we looked at these 6-month order blocks. I'll be doing that this week. These provide, man, a heck of an opportunity. It's kind of like that oil trade that I started buying into, and now it's paying off. If you look at the long range market, right, for those, especially people who are into swing trading, if you look long term and long range, and you get a bias from a longer range time period, right? If you find your bias, as you can see, this is going to be a bullish order block on AU. I'll just stick with AU. But if we know that price is going to pull down and tap into the order block and push up, and I don't think it'll tap all the way in because I think that it's going to be a little imbalance in here, and we'll have to see. But if we know it's going to push down and then climb, right? Maybe you don't trade the push down. Maybe you're just waiting for it to turn and start climbing, and then you can get in and you can ride it up, right? Where is it going? Well, if the dollar is still crappy, maybe we'll push up and start filling these imbalances. But we can't do any of that, right, until price starts breaking this low or these highs, right? Once price breaks these highs, it'll pull back. Then you target the next high, right? Pull back, you target the next high, right? It's understanding where your swing points are on whatever chart you're trading. Okay, if I'm expecting price to push up, then I'm targeting that swing high. In a pullback, I'm targeting this swing high. Then it pulls back, I'm targeting this swing high. And on the lower time frames, I already understand that my higher time frame target is here. So if I get a good entry on a lower time frame, I can trade it that direction until it gets to my higher time frame target. Everybody understand that? Bray.
Yes.
All right, we got 6 days left. We got 6 days on the 3-month. We got 6 days on the 6-month. This could be powerful info for us, because at that point, we'll wait for a pullback. You know, some of us will actually trade the pullback, and then we'll either trade the direction, trade our directional bias, whether it's short or long, and we can ride that to our targets on whatever time frame this is, right? So if this 6-month is a pullback and then price is going to ride, then once price turns, then I can have a buy in, and I don't have to close that buy in my personal account. If I'm expecting the buy to push up to 215 and prices at 201, but I got $15 of buy space that I can let run up in my personal account. Now you can still be trading other pair, but this position is just going to increase. Does everybody understand that?
Yes.
So these, in my opinion, these are the opportunities that we as traders can really take advantage of, right? Because you have a pair that you have boxed in pretty much, right? If this pair starts off and it pushes down and it touches this line and turns around, when it turns around, man, all we have is fresh air and opportunity. If you catch that buy trade and your bias is for it to go north for this new 6-month candle, then you have 6 full months to ride that position up. You can get re-entries when it pulls back, but you never have to close the one that you get at the bottom. So it's just something to think about. I know everybody isn't a long-term trader, right? Everybody doesn't trade the same way. But all I'm saying is when you get these trades and those trades turn and start going in your direction, then you have the advantage over the market. You're not the victim at that point. Now you're the person in the position of power. So when you take those trades and those trade opportunities, if you're understanding the long term or the long range direction, then you have the opportunity to build real capital, right? To build wealth, to add to your capital. It's how you can grow a small account into a relatively large account because you're trading one direction. And you can be a little bit more aggressive because you know that this trade is going to end up north or this trade is going to end up south. Everybody understand that? It's kind of the way we do when we trade that 1 week, the 1 week chart. We know that week, once the move happens on Tuesday or Wednesday, we can trade that direction, generally speaking, until Friday. Well, in this case, you might be able to trade that direction for the next 3 months. It just changes. It changes how we can take advantage of the market.
The group is ready for it. You know, at this point last year, they were hearing these conversations, weren't really ready for it. Now more people are ready for it. And they're in position to catch these entries by the end of next year. We had people say they need to work on patience, they need to work on market structure. So by the end of next year, you shouldn't have to come back to that question. You should be able to say, I know market structure this year. I know patience this year. It's not going to be, oh, I still need to understand market structure. There's no way you're saying that by the end of next year. If you're surrounded by the right people, you'll be beyond that, right? You should be beyond that within the first quarter of the year. You shouldn't be saying, I need market structure. You need to say, psychology. It ain't psychology. We're going to debunk that this year. It's not psychology, right? We know what we're looking at. It's not psychology. We're not going to speak that into existence because it's not true, right? We know how to read it. Go from the basics with Kim straight to the bank, right? We got everything we need here. We put it in play. Call it what it is.
And just think, what have you got in this trade right now? LV was in this trade at the beginning of the week. I hate you, LV. But LV got in this trade last week. Look where this trade has to go. You got a bearish order block. You got the tap in, right? Now the trade is pushing down. If you got in this trade at any of this point, if this trade is going to push down, if your bias is for this to sell, right? You get this huge down move, you come back and it closes the imbalance. If your bias is for this price to go down, bro, this entry is perfect. So this trade could come 1,000 pips, 1,200 pips, right? It could just push down. You get this big move, you get a tap into the imbalance. I know it didn't close the imbalance, but you tapped into the imbalance and it's pushing down. You broke structure down here. You came back up. What if we just push down to the equal lows? Look how many pips are available. And look where your entry is. Look how you're in the trade. 27 pips, 2,700 pips. It's only going to take one or two of these trades to open your eyes to the possibilities. This is what trading offers you, the possibilities that it offers you. You only need to catch one of these. And you trade it, for the next 6-month candle, right? And even if that 6-month candle doesn't go all the way these 2,700 pips, maybe you just get 1,000 pips. Maybe you get 700 pips. But because you know the direction, you can be a little bit more aggressive. You can anticipate a little bit more that price is going down. So when you see these 2-week order blocks that's saying sell, then you saying, but man, yeah, that's going my direction. I'm getting in this trade for it to push down the next 2 weeks. And when it pulls back, you can say, okay, I know we still got to go down, so I'm hopping in. I'm putting both feet in him. I'm focusing on this and not some trade that I don't know where it's going. It just adds a different element, in my opinion, to trading, where your confidence in the trade actually selling is very high, right? And when it pulls back, it's just a pullback and it's not a reversal. You guys have any questions?
You said like Michael Myers.
Like Michael Myers, like a mofo. Yeah. Okay, let's look at the order blocks for this week. First of all, if you traded a 2-week order block like from last week, then obviously it ain't hit the TP. It's continuation. So even though I didn't get no pips off EA, I'm still rolling with EA. I'm still in EA. I wait. I got 54 pips. I'm 54 pips up, and I'm still in the trade. So it is what it is. But this week's order blocks, I think we had AJ. Okay. AJ, we had a bullish order block. Don't be fooled by the bullish order block. Last week it was a bearish order block, 2-week order block. All it did was go up and tap in. It did exactly what it was supposed to do. Now I'm looking for this price to fall. It's not going to be a new candle, but I'm looking for this candle to start pulling down, right? Let me make sure my moving average is on the right side. So I think this is right on the moving average, but I expect these things to go down. Okay, this is a little bit above the moving average. I expect it to still go down. Okay, I don't care about GC. I don't want to hear nothing about GC.
Hey,
F did me dirty, y'all.
hey, I did you dirty.
Yeah, you told me to take EA.
You took,
You told me to take it.
you did yourself dirty.
I was in GC. And Elfie told me to get out and get in the EA.
Oh, is that who I followed? I followed you in the EA?
Yeah, I got it. I was in both of them, and then I closed
Yeah,
my GC.
yeah, same here.
Yeah, GC just rolled. I was like, yeah. Oh my God.
It's fun though to hear people talk about different pairs. I'll go look. As soon as I hear it, I'll go look real quick, look at the quarter lows, put in what I think I like, and then walk away. And then I'll start seeing my pairs pick up. And they hit or they don't hit. It's cool.
Either or.
Choose lot sizes that don't hurt. Yeah, oil is fire.
I'm surprised this wasn't a bearish order block. Because I'm still bearish on this pair.
Mm-hmm.
I know there's no imbalance that this is going to. This is going to sell. Let me see where the 2-week joint is. 2-week. I would definitely target these lows.
I mean, it's a beautiful sweep. I mean, such a clean sweep with a tap in off the chalk. I mean, come on, it don't get no cleaner than that.
I agree. I would expect this thing to just push down. This is where it came from. So this would be TP1, but then I would look for it to take out the next swing low or see if it takes out the next swing low.
Yeah.
Do you think he's gonna take out the eye on the left before he moves?
The high?
Mm-hmm.
You
No, the
mean
next one.
up
To the
here?
left. To the left.
This one.
Far left. Yeah.
I don't think so. Eventually it will, but these are relative equal highs. This wick didn't even take out the top of the first 2-week candle. So maybe well, this maybe next month, you know, maybe we'll see how far this pushes down. If this ends as well, even if it ends as a bearish order block, it's probably just a tap in. We'll have to see how this plays out. If the dollar continues to drop, then I don't see this pushing any higher. Generally speaking, the JPYs get stronger when the U.S. economy is showing signs of weakness. And that's kind of what we're seeing. The world's #1 economy is in distress. Did anybody trade UJ?
Yeah.
I mean, that thing fell straight down. Man. What's that?
Yeah.
I still look for that thing to pull to keep dropping too. I think all the JPY pairs are going to come down. You know, this might not be the clearest sales signal. So maybe you're not cool with taking sales, but that's why I'm looking at these pair falling. I'm in EA, so I'm going to stay in EA. But you know, if you want to venture out there, I would definitely look at them selling. Maybe this is not your order block to trade if you're looking at the AJ order block. AJ is a bullish order block. But
Can you go back to UJ? I think I have going to like 140. I mean, I think it said 140. 141. Like 141 area, 140, 139 at the lowest. 139 like 0.5 at the lowest, but like 141 for the next TP.
so this low right here. Well, actually, you got it before that low.
I mean, it's beautiful. I mean, it's telling you everything. That right there is a no-brainer. You know the distance that it can go, and chances are it's gonna go that distance in the same amount of time, and then it's gonna elevate again. And it's fractal. It has a balance that it likes to keep. It's gonna keep its balance, right? So we know how far it can go, and it'll probably go that far, right? And stay within that range and gradually accumulate. And it can't stay down. It'll go down, but it ain't gonna stay down. It's healthy. It's doing what it's supposed to do when it's supposed to do it.
To me, this will be a great move. We finish like I think we're gonna finish with this 3-month order block. You wait for the buy up, and then you can probably sell it down to at least the moving averages.
Mm-hmm.
What does the weekly look like?
You said the weekly?
It looked like is trying to. I mean, not the weekly, but the
monthly
before the weekly, like the daily. I think it's like the one that might buy up a little tiny bit more before it continues sell. Tiny bit, a little bit push.
I'm not interested in this until the monthly until that 3-month candle close. For me.
Yeah, I'm already in it though. So
you're already in it. Are you selling it or are you buying it?
Selling.
Can you check GJ too?
You said
GJ.
You finished with this TT?
Can we go to the 8 hour? The 8 hour?
TT, you getting jiggy with it.
Yeah. Like, you know how like you see a little bullish order block or whatever, like, okay, might want to just push up, tap those MAs one more time, and then
But
before it's
I don't like this for a sale right now. Starting off, but it is what it is. I don't like the fact that it didn't break this low.
yeah.
You can look at this as a going and tapping in, right? We close the imbalance. I need this to come down and break this low, not come down and go shy, because that's a chalk to me. Chalk, pullback, where we going?
Yeah.
We going to these highs? I mean, you know, it just, to me, I don't like the setup. And you know, I'm not trading this, but I just don't like that setup.
Mhm. All right, you can go. To the next one.
To GJ,
So,
it's the same garbage. The same thing.
so you don't think this is gonna sell too?
Well, hold on. I do think they're going to sell. I don't know when. You know, I do think they're going to sell. But I'm not selling it right now, is what I'm saying. You know, I am definitely bearish on all the JPYs. But you know, they can get here and they can poodoo around. They can just hang out like EA did. All I'm saying is, for me, for my best opportunity that I see is well, I don't like this 3 months, but I like UJ's 3 month chart. I like UJ's bearish order block at the end of the month. Now this one doesn't have a bearish order. This has a bullish order block. That doesn't have an order block. This is bearish. So, you know, maybe I would trade UJ and EJ. UJ's chart to me looks better than these though. This is a good looking 1 month chart. I could buy that up with confidence.
These are those little hints. You get people who are privy to stuff like this, and for us, it goes by our eyeballs. And these are the pairs that we're supposed to be looking at, because it clearly shows you the tap in that you're looking for. The other ones don't. But we'll let this go right before our eyes, and then we'll go to those pairs that we were saying, don't look at those, look at these. We'll still go back and look at them other ones, because that's just what we want to look at. And then we wonder why we get in trouble, because it's not clear. Roll through that Rolodex. Find what's clear. Focus on finding what's clear. Try to stay away from things that aren't clear. And then you just happen to be at the right place at the right time all the time. That's what it's going to feel like, because you know what healthy looks like.
And if you don't like the picture, don't freaking trade it, man. It's not worth it. It's always going to be a more clear setup the next week. Just wait. Get in your demo. Save yourself some money. Was anybody trading these pair, the JPYs, other than I guess you were trading GJ?
Yeah, I'm in the sell for GJ.
Okay. If you're already in it, then you know, I think that's cool. But if you're not in it, then I wouldn't get in it. I'm definitely short on these JPYs. For us who are just waiting for the opportunity, you know, maybe next week we'll have a new opportunity. And we all know that it's gonna buy up first. So just think, if already UJ has moved 563 pips. So let's just say UJ pushes down a little bit more next week. Bro, this is gonna be a beautiful trade starting the 1st of January. Buy that thing up, then let it turn and burn, man. I mean, you might only need to trade one pair. Like this UJ, like if you catch one with a good candle, you'll just need to trade that one pair. You know, maybe that's gold. You know, maybe I don't like that monthly, but you know, maybe it's oil. Maybe I don't like that monthly either. But maybe whatever one you find, maybe you just need to trade that one. And you know, you can make a lot of money just trading that pullback. Selena,
Yes.
I know you sick. You still got your GM position in?
No, I still got my old position in.
I don't care. No, I said GM because you had a position, you had an entry at 208.
I did. I did. I did. I did. Thank you for
Yeah,
making me
that's
feel
600.
even worse about it.
Selena will be up 686 pips, y'all. Ugh. Selena, you was trading $8 a pip too, because you had an $800 account. You really traded $16 a pip because you had a $1,600 account.
I just don't have a comment. I'm already sick about it.
But listen, if you had did the right thing and traded $15, let's just say $15 a pip. Can you do that math for me? 15 times 671.
Didn't she just say don't remind her?
No, everybody needs to be reminded about this. You know, this is very important. 671.
It's $10,000 to me. Okay, it's $10,000.
Hey, anybody else got 10K to throw away? Anybody?
You're wrong, Ty.
Kim and Elfie, thank you for the support. I appreciate y'all.
But I want the reason why it's important, guys, is because we saw we saw that. We saw the trade. And but you know, these are the types of experiences that only have to happen to you once. So the next time the trade sets up like that, the attitude around the trade will be a little bit different. And you know, maybe the urgency about it will be different too. And you know, it's all good. Everybody has to go through their little growing pains. We knew the trade was pushing down. We knew why the trade was pushing down. Now maybe the next 6 months, maybe we're pushing up. And nobody has to remind anybody that they could be 10K, you know, on the good side in a short period of time, relatively short period of time, you know, 2 months. 2 months. Opportunities will always present themselves, right? So, you know, if you're a dumb money trader or a smart money trader, you see a shoulder, you see a head, you see a shoulder. I think most people understand that this is probably going to buy 6 months. This is a pullback. We're pulling back. When does this candle close? 6 days. Maybe when the new candle opens, maybe it goes down a little bit further. Maybe not. But we don't have to rush. All we're doing is waiting for it to start buying, right? And we can wait on it on the 4 hour. We can wait on the 8 hour. It doesn't matter. We can wait on your time frame. Once it crosses over, and it starts buying, there should probably be a general understanding that it's going to go up for a long, long time. And then you can be strategic in how you approach the trade. You can use smaller lots. You know, you don't have to get huge lot sizes, but you can just continue to add to the position as it pushes up. And maybe, you know, you have a whole lot, you know, in a month's time, or two lots, you know, over the course of a period of time. Maybe it gives you a bullish order block on the weekly, and that's your opportunity to you know, get you to walk into the trade, and you can get you a few entries that week. And maybe you don't have to get out of those entries for the next 6 months. There are ample ample opportunity on a lot of these pairs as we approach you know, the new year. And we're going to have monthly trading opportunities, 3 month, every chart is going to reset, right? Whether it's the 1 month, the 2 month, the 3 month, the 6 month, the annual chart, they're going to reset. And now we have new opportunities to be patient and wait on whatever trade that we're stocking. We can stock it. We can sit there and we can wait for it to give us exactly what we want to see from it, whether it's a buy or a sell. And then we can walk into that trade and we're in control. We're not blindsided. We're not tricked. None of that. Because we see the long range chart. We know, we have an idea of where the price is going. Any questions? Does anybody want to break down a pair?
I want to break down the OBs because I was confused on the wicks.
On what wicks?
On AJ, there's like a bullish candle, and then there's a long wick inside the bullish candle. And I'm like, is this an imbalance or
You mean this right here?
no?
This is
You
AJ.
drop down to the 4 hour and the 1 hour.
This is a 4 hour. You mean this wick right here?
Yes,
This wick closed this imbalance.
correct. Okay, so then I'm like, there is no imbalance on the golden zone. So how would you?
But did you hear what I said about AJ?
No.
All right, I need you to listen. This is a 2-week bearish order block, right?
Mm-hmm.
If you fib this order block, there's your zone, and your 78 is up here somewhere. Price pushed into that order block.
Okay.
I expect price to push down. If you're looking on this time frame and you're expecting price to go low, your first target is going to be the equal lows, right?
Yeah.
The next target would be these lows. Are you already in AJ?
No.
So if you get in AJ, you're looking at this as a buy, right? So when price came down here, you would get in for a buy and you get crushed. If you drop down and you didn't see, if you didn't see an imbalance, what are you going to target for your, what is your entry?
Waiting for it to sell to the golden zone.
Okay, it sells to the golden zone, then what?
I'm going for a buy.
And where would you buy it to?
The equal highs.
So you would try to buy it back up here?
Yeah. If I'm understanding market structure.
So is this a uptrend or a downtrend?
Up.
Is it?
I think so. We came down and
So
then
what is this? These are equal highs.
Mm-hmm.
Is this an uptrend? Where is the higher high?
Where is the higher high?
Where is the higher high? Higher high. Is this a higher high?
If you're looking at it like that, folks, the last swing, you're looking at the last major swing, which is that where Todd's high, where I don't know where his cursor is right now. Where's your cursor? Okay. So the last highs would be up at the top. That would be the top. And then, Todd, if you go to where the A is in Australia,
Oh, I see what you're
no,
saying.
not that one, the one below it.
Well, this one.
Right there would be the break of structure where price broke structure. And price is now pulling back into probably the 618, maybe the 778. If you fib that last swing, the major swing, that swing from up there to the low, all the way to the bottom, right there, prices tapped into the 78 and then started breaking structure to the downside. So once it tapped into the 78, it started breaking structure to the downside. So you were,
This is the first one. This was the first break of structure right here, folks. Here's your structure. It tapped into the 78. This was the low. You see that?
Yeah.
The price break that low with an impulse candle.
Yeah.
Then it traded right back into that impulse candle. So
Yeah.
you're buying for what?
A higher high, not those equal highs.
So why would you buy this if you see it broke structure? You wouldn't.
See, these are rhetorical questions. He already knows the answer. He's trying to get you to see it, right? The question was it a buy or a sell? It's a sell. There's nothing here that says buy. That's why he's testing you to ask you, what do you see? We all, as experienced traders, we look at that and we see all the characteristics of a sell. But we're saying, when we ask the person, they say, well, I'm looking for a buy. Yeah, because it's saying bottom of structure. But according to the structure, this is a sell. So we're trying to lead you into saying that. Because right now you're not saying that. You're saying a part of it, and we know why you're saying that. But you don't see the geographical view. We're trying to get you to see the geographical view so that you don't fall for the little interior views.
And this is why I say you got to get with him to understand market structure. You're saying it's a buy because of this move. But what I would ask you is what structure did this up move? What did he break? What high did we break by this up move?
Not the highest high.
So then you can't say that this is structure. Here's your high, here's your low.
So that that high and that low that he's pointing out is major structure, and then the structure that he said broke on the inside, that's internal minor structure break. So that would be like on the smaller time frame, you would see that smaller structure break, and you would just watch that to continue to break internally, zigzag down continuously.
Right. It's according to your taste. We want you to taste all of it, right? We don't want you to taste bits and pieces. We want you to taste the whole thing so you understand why you're waiting for the next piece of it to print out. You got to see what that means. That means you have to be intentional. You can't pull your hand off of it. You got to keep your hand on it, right? But people are busy, so they don't have time to follow it in that fashion. That's why we say put the alerts at the swing highs and swing lows. That way you can walk away and those alerts will hit and they'll let you know, right? Now you can continue on with life. You got those alerts set in the right spots.
Yeah, because it will get confusing quick and be like, wait, where was I? And especially if you looking at another pair, more than one pair, you're easily, because the market is just constantly moving, in your own time frames, and you're maybe driving to work thinking about the chart, and you're not going to remember where you are. But that break, I think for Kim, that internal break that Todd is talking about, she likes to see it close below, in which it did. If we
That's
zoom
the
in on the
safest.
internal break, it closed below. It didn't just wick below, but it closed below.
Which lends a hand to patience. You need to see it close. That's the
Mhm.
safest thing you can do. That's why people are so impatient. They don't think about the closing of the candle that's sitting over there in your trading view. It tells you how much time is left on that candle. Most people don't look at that. Even if they know it's there, they still don't pay attention to how much time is left on those candles.
And then look at how it closed below the MAs, like how Todd likes to have like this. A good strategy that we like to follow is once we see it close on the 4-hour under the MAs, we wait for that tap in, and we can, this is also ICT bullet entry, because you see the imbalance on the 4-hour, you can just set a sell limit there or an alert there and market execute, put your stop loss above the 4-hour order block, and then take the trade downwards that way. But you'll know that you'll at least get tapped in if you put your sell alert for the bottom of the imbalance, which that would be ICT, but you can put it in the middle.
Right
You can put
here.
it 50%.
I'm talking that talk.
Either way, you can.
If you're expecting this to sell, your target would be these lows right here.
Yeah.
Because you're a 3% trade. By the book. That's a by the book setup, you know, that's going to play out, right? For me, I would target, because we pushed down to this low, I would target that low at least. Because the market already pushed down here before it came back up. So this is the low I would target, but you could take your first TP, you can take it at any one of these lows. Any one of these lows, you can take your first TP.
So
So
I would say to Phoenicia that where I see that you were getting confused about the structure is exactly how I was confused about structure a year ago, where I didn't, it was really hard for me to understand internal break. I'm like, it didn't really click, but I see the internal break. It's inside of the bigger structure, and it helped to put the fib on and then look inside. That makes sense. So
you're going to have to watch market structure videos, in my opinion. I don't think there's a way around it. You know, at least for me, that's what worked for me. I don't know about everybody else, but I think you just have to keep watching those market structure videos.
I mean, this is the number one thing. I mean, like, market structure to me trumps psychology, because it'll help your psychology, improve it.
Right.
Like,
You'll see that it's not psychology. We're saying that that's what it is, but when you find out what it really is, you'll see that that's not it. It's just, you just have to trust what it's telling you. Right. It tells you everything you want to know. If you want to know, you have to want to know. And once it tells you and you say, okay, it's really telling me it's going from here to here. Right. Wow, I've been doing all this for no reason. I'm telling you, that's what's happening. It's the institutions. That's their language. That's how they move. All right. The better, the faster you get that. It doesn't matter what currency you trade. The Japan, when the UJ, when it dropped from 150, they knew what they were going to do as soon as it touched 150. Forget about all the history and her. No, they're gonna drop it at 150 as soon as it touched, bang, out of there. And then went right back up there again. And they thought that they were gonna catch the sell there the second time it went up there, and then it went through 150. Right? We saw it. We saw the whole thing. That was a historical moment right there. Trust what you see. This is the game where you get to finally get the facts for yourself and benefit from the truth, because you're going and you're tapping into the truth. I love it.
And you trade what you see, not what you think.
Yeah. Because they want you to think. That's the predatory ways of the institution. Everything you're supposed to be doing is right here in front of you. Even when you go get a job, you're doing what these candles, you're out there making those candles move. Instead of just sitting here and moving your fingers and using your brain, right? It's all starts here. We're pulling it out of thin air, folks. Let's get it.
So more videos, huh? And maybe you're confused because the order block was a bullish order block. Did that confuse you at all?
Yep.
You said it did,
Yes, it did.
but did you look at the weekly chart and as far as what's going on the weekly chart?
Mm,
So let's talk it through. Let me just trash these drawings because okay. So on this weekly chart, you have a high, you have a higher high, right?
yes.
Now, when this chart made this higher high, you have a swing low down here, correct?
Yes.
Actually, this is the swing low. So if I were fibbing, all right, price came down, hit the 50, and it pushed up and it broke this high, right?
Yeah.
Okay. So we basically in a rally base, rally base, rally base, rally. So when you're in rally base, rally, your basis, you know what a base is?
Nope.
Okay.
I'm
Prices,
assuming support.
prices
but-
going up, it is support. So price is going up, then you get a base. It's going up, you get a base. It's going up, you get a base. What you would like to see is your basis hold. You want these bases to hold. You don't want them to be broken. It's like walking upstairs, right? Then you get a pullback, right? Then you get these bases. This is a base on a larger time frame, right? And then you come here, here's a base. So as a person who wants to take longs, I'm using these bases as my levels of support. You know, if I get in a long here, I expect this order block to hold my trade. So what happens in this case is your base gets broken, right? Price is going up, and now all of a sudden your base is broken. Because this base is broken, this is called a chop, a change of character. This was a low. This was a higher low, right?
Yeah.
And now all of a sudden, why did price come down and break your low? That's price telling you.
We're going lower.
Yeah. So once it broke your low with this momentum candle, look at the imbalance. There's your wick, and there's your wick. So all this is imbalance. You see it?
Yeah.
So if this breaks, you expect price to trade back into that imbalance. You should be able to take a short. Then you just target the next low. Then you target the next low. Then you target the next low, and so on and so forth. Does that make sense?
Yeah, it makes sense, but
Well, you have to see this.
what I'm getting confused on is like the trade setups in the sense that I'm looking at order blocks and then I'm fibbing the order block and I'm just doing that.
Okay,
So I know market structure plays a part, but
so
up until
no,
now,
it all starts with structure. If you just told me that this means it's going to sell, then when we drop down to lower time frames, we need to look for an opportunity to take a sell. The order blocks, right? This week, it ended with a bullish order block, which is a perfect opportunity to get in for the sell, right? Because on a bullish order block, we expect price to sell into the order block in order to buy up. But in this case, because we broke this low, we can at least sell this to the next low, which is this wick right here. I'm selling this to this wick, and we'll see what it does. Does it go down further to break the second wick, or does it turn and burn back up? Does that make sense?
yeah.
The only green light you have right now is to sell this to this wick, 283 pips. Right?
Yeah.
That's it. That's all you got. You can't assume that it's going to go to this wick. You can't assume that it's going to go to this wick. Unless the higher time frame, higher than this weekly, is telling you that it's going to go further down. And in this case, it's not. It's not telling you that. Now, what could happen by the end of the week, this could end up as a bearish order block, but we don't know that. So all we're doing is going off of what this weekly is telling us. And the weekly told us with this candle that price is going to go lower as soon as I pull back into this imbalance.
Gotcha.
Did you watch ICT 2022 mentorship slide number 3?
Yeah, episode 3, yeah.
Are you sure?
Yeah, because I got up to 13.
But did you watch number 3?
Yeah. Are you saying episode 3?
Yeah.
Yeah.
I need you to go back and watch episode 3 again when we get off the call.
Okay.
This is the exact setup. He was on a 15-minute chart, and we're on a 1 week chart.
Now, you guys came to an agreement in front of all of us of what you saw and how you were going to approach it. Now, how do you do anything else other than what was discussed? Now, that's where the discipline comes, because once you walk away and you didn't take any of this stuff, you didn't document any of it, you didn't say, oh, I'm going to do this when this happens, I'm going to do that when that happens. You did it in front of everyone, but you didn't keep it in your notes. And then you go to the side and do something crazy. You don't document what you did. You don't do what we discussed. And now it's all confusion. That's how it happens. That's how it happens most of the time. And we say we know, but we don't, because we haven't proven that we know, which makes it a waste of time at one point, because I just went through all of this with you and you didn't do anything that we discussed. Now you see how that is for the instructor, right? But we're willing to go through that. But we really want you to see that we already know all the excuses. We know the answers to all the questions. They're rhetorical. We already know the answers. We're trying to get you to say it. We already know what you're doing behind the scenes. We're
Pen
trying to get you
spoon.
out of that. Yeah. We're trying to get you out of it. How can you do anything else? There's a whole thousands of other different things that people do, except for what we just discussed. All right. And we can prove it because we'll make them say it and they can't say it because they don't know what they did. They don't know the price. They don't know anything. Right. That's confused. And if you're confused, you need to not be confused in 24. And we're going to debunk the whole idea. You're either confused or you're not confused. We can tell by what comes out of you. You can't fake it.
And what I would suggest to you, folks, is this is probably not like your grade A setup. This is a bullish order block that's going to sell. You know, all order blocks aren't created equal. So, you know, you're just getting started. So just, you know, take it with a grain of salt. But you got a lot of videos that you need to have a lot more video time. Order blocks, you know, ICT. I mean, you have the market structure, all that stuff would just have to be drilled over and over.
Can I just add something real quick
Of course.
regarding this particular pair and that order block? Because I remember I used to have issues with that too. Once I started going to the higher time frame order block, because this one actually has a 2-week order block that has been tapped in. Can you go to the 2-week, please? Yeah. So you see that there was a bearish order block and that order block has been tapped in basically
Yeah.
perfectly. That
Yeah.
basically shows me that it wants to sell because it did a very clean tap in. So I think OG once said, or anybody before also said, like, look for a setup or look, or how you say, like, go through your time frames. I'm sorry, hold on.
The Rolodex.
Go through your, yeah, Rolodex through your time frames to see what you need to see or what you like to see. And when I started doing that, I noticed, okay, like I flipped through to maybe 2-week or 3-week, but in this particular case, the 2-week and then the 1-week shows you, yes, it's a 1-week order block. However, that was a 2-week order block that tapped in. Now the 1-week order block kind of makes sense that it wants to really sell. And maybe, Todd, can you turn on your MAs? So I'm not sure if on the weekly, on the 1 week, if it already, like if it's still below, can you go to the 1 week, please?
Do you hear the confidence?
So basically here, it has kind of crossed over the MAs, but it's still not quite sure if it's, you know, a buy. Does that make sense to you, Fo? I'm not sure.
No, like right now, I'm only understanding order blocks and fibbing the order block and looking for imbalances. That's all I understand right now. So
Okay.
we do this type of stuff. This is where I get confused because I'm trying to stick to one thing and then I'm
Hey,
being fooled.
you did
Okay.
it. It was perfect.
2-week, I
But you
think,
still need to add up stuff.
and if you look at the 2-week I would say this, because I don't go to the 2-week because it's trapped between an order block and an order block, right? So you have a bullish order block to the left, and then you have a bearish order block to the right. If I was giving you my advice, I would say you either wait for it to break out the top of the order block, the bearish order block, or break out the bottom of the bullish order block. That would be my advice. That would be my advice. I get what Todd is saying. I mean, because I understand the market structure. But if I was telling you as a beginner, like I would wait for price to either, I probably wouldn't trade this because it's in between two order blocks, right?
Yeah.
It's pretty much in the middle. I would say it's in the middle, so don't trade it. So I would definitely wait for it to break out either the top or the bottom before getting in.
Safety.
That's
Safety
what
first. Yeah.
I agree with you.
I don't consider, you know, I don't consider that.
And this is a break. Just like this is a break of structure. It did officially run that order block. But as a new trader, this is not a great setup. I didn't tell you this was a great setup. I agree with Kim 100%.
Say that again. Wait a minute, say that again.
Yeah, I agree with you. This is not a great setup. It's not as strong. For me, this would not be my grade A trade setup. And that's cool. But because you asked me, you know, I just tell you what I think. In my opinion, those 2-week order blocks from last week, it was a fresh week. If you had bought this up, then you couldn't go wrong because the order block started, last week. Just like you know, when Elfie tricked me out of my trade last week, you know.
What?
This was my trade last week. We expected to buy out. We bought up and tapped right in. Elfie tricked me out of my trade, and then she took the trade. But if you entered this trade last week from here, and now you're 200 pips to the green, you know, it makes the difference. To me, when you come in the middle of the trade, this is 216 pips. Elfie's up. If this goes and it bounces off this order block, she's already up 380 pips. So, in my opinion, on the order blocks, if you're trading in the middle of those order blocks, you're going to get a bad deal versus trading when the order block starts. And in that case, it was a 2-week order block. It was listed, right? AJ was on that 2-week order block last week. And if you had got into AJ last week, you would have gotten it for the buy. And instead of, you know, worrying about it, you would have bought it up. It went up 233 pips and it pulled back 158 pips. So hopefully you would have killed your buy when it was up 200 pips, right? And you wouldn't care. You'd be like, okay, I think it's going to sell. So you would have bought it all the way up. And maybe you would have got out when it started pushing down. Because when you would have bought it up to this level, right? And what Alicia always says, this is a breaker block, you know, whatever. But that's where I would have expected price to go up there, and you could have got out of the trade and just waited to see what you get, you know, next. But I do expect this to sell based on the higher structure. But it's not a great setup. I didn't see any great setups, in my opinion. But, you know, it's Christmas week.
Thank you, everybody.
You're welcome. Selena.
Yes, sir.
How long are you going to hold this oil trade?
I'm hoping it buys up this week, but I don't know what it's going to do. I looked at it on the 4-hour to see how it bought up on that down move. So I think it was at the golden zone, but I don't know. Hopefully I hold it till I get in profit at least.
You hoping? Okay, hope.
but I know it's supposed to buy, so I'm just, I don't know. I don't know. But see, if you do that down move, to see how far it was gonna go, if I think it went up to the golden zone and then it starts selling again. So, but
Well,
I still believe in this in the buy though.
yeah, you caught between these order blocks.
Exactly.
Did you hedge? Did you lock in your profit?
Oh yeah, I hedge. I hedge.
Okay.
Oh, we haven't heard any hedging complaints lately. I think people have figured it out. Let's get it. That was the problem of the year coming through the year. No, we're not hearing no complaints anymore. All right.
Looking like a sell opportunity coming.
You said what?
Looking like a sell opportunity coming.
Man, this thing it's gonna be a green candle right here.
You think?
Man. Israel and that hey, they ain't gonna get better. Them Houthi,
Now,
them Houthi army, they gonna still attack every tanker that come through there. You're gonna be paying
yeah.
$10 a gallon. You're gonna pay $10 a gallon in Ohio.
I'm just
What's
gonna be
up?
right. I'm gonna
What's
ride
up?
in the Tesla.
Hmm?
I'm gonna catch the bus.
No, you're gonna get you a skateboard.
I'm gonna utilize that bicycle in my mama's garage. Ah, what's it called when everybody pick up everybody for work? Pool,
A carpool.
carpool. But I'm gonna be the carpool person. And everybody just gonna come send me some cash at money, and I'll just Uber everybody to work. That's what we're gonna do, so I can get my money back.
It ain't gonna be hard to do because everybody's gonna have digital wallets. You can literally become your own setup. You can do everything you really want to do.
People have been already trying to do that. Talking about, can I
Yeah,
personally request you? You can personally cash me.
right. It's that simple. You don't need a bank.
Mm.
It's something that simple. This is exactly why we don't need banks, and that's why they're trying to get rid of them. Exactly because of what we just said right there. Very simple, very straightforward. The banks are making money off of everyone for no reason.
Definitely, I haven't been with the bank in a long time. I do the credit union.
Mm-hmm. Now they're cutting out the bank. Makes perfect sense. And we think that's crazy, but it's not crazy. We don't need a bank. Oh, man. It is good to know that, right? Something that simple. Why is the banks going away? I don't care. It just makes sense. I don't care how we get there. Let's just get there and figure it out. Digital currency. That's what we're going to be dealing with. That's the technological breakthrough. We're going, whether we like it or not.
Let's get digital.
Mm-hmm.
Buy when there's blood in the streets.
Yeah, blood in the streets. If we get this retracement, everybody who's in the world of trading is going to experience catching a buy at its lowest point. Now, whether it breaks resistance and resistance becomes support, we still get that opportunity. So it can go bullish. That's fine because it'll just come back and give us our entry no matter what. Or it gives us a leg all the way down and gives us the low, then gives us chalk. And then we can catch not only the bottom, but the first pullback. So it doesn't matter what it does. We're going to catch it. So That's just what we're gonna do. You can't, there's no way around it. We know how to read charts. We'll see it very clear and we'll catch it. So I'm excited about that for everyone. Yeah.
Y'all good to go?
Hey,
Mhm.
All righty. I'll see y'all in the market streets.
I
Bye. Thank you. Bye.
Bye. Have a good holiday, everybody.
Thank you.